You're watching today's video technical update presented by FX Times. It is Friday, April 16th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. This week we saw the risk appetite snagged as risk aversion ended the week with an exclamation. Once again, the euro and the sterling lost the most to the yen, but even the commodity currencies in the Aussie and the loonie felt the effects of the risk aversion. The US dollar Japanese yen is also in a decline, but within the context of a possible reversal rally after a long-term bearish mode. This video is being produced at about 1:45 p.m. Eastern Time, ahead of the close of this week's trading. Here's the euro yen. In the weekly, we see, first of all, a failed attempt to rally above 128, which is his previous support, now tested as resistance. Also, we had this bottom basing action, and the rally failed. So that's actually a very bearish combination of price action. Looking at the daily, you see here a break below this rising trend line, and also this previous support here would be a bearish indication, would be a bearish signal. And you see here with this kind of projection goes to 114, but we probably shouldn't use this projection. Looking at the weekly here, you see you have 1, 2, and if the market continues declining, this is the third decline. So I would, for my third rundown, project the first rundown instead of your middle one. Okay, and that brings the market actually, if you truncate it instead of truncating it and using a more common bottom here, so you don't want to over project by going all the way down here. Here you have two lows here. That's so this is the conservative projection, and that goes to around 118, near the 78.6% retracement area. Now looking at the daily, that means this projection is a little aggressive, but if the market can go below 40 here, this projection is possible. But look for the market to bottom as the RSI nears 40, because that would confirm a bullish attempt. But the market is about to invalidate that by the breaking below 123.50, and if the market also breaks below 40, then the aggressive outlook is also becomes more likely. Okay, that's it for the euro yen. The pound yen is also in a similar situation as the euro yen. You see this basing action, a bullish attempt, and now the market is showing a reversal. So there could be a possible reversal such as this, but again, I would first look for some support here around the 78.6% area, 128.70 area, one for this third swing down. Now let's see, let's do some ratio analysis. This is your first swing, and you see your second swing is actually shorter than your first swing, so this is not an impulse wave. Okay, this could be a corrective wave, so I would look for bottoming around 128.70 if the market continues to decline. Now looking at the daily, we see that the market here is forming a double top. So if the market breaks below 141.50, it's about to, it's going to head to 138.50, and then if that breaks, it may go to 135, and but if the market instead breaks above this 145 level, it goes to 147 and 150.80. So these are the short-term outlooks for your bullish and bearish projection. The bullish being triggered if the market breaks above 144.50 or 145. The bearish being triggered. Actually, first you may want to now look at the 4-hour time frame here. The market, if the market breaks this previous low and also gives us a pullback to confirm the break, such as this, okay, then it should go to first support at this 138.50 area. So actually you may not even have a pullback You may have a pullback after you hit 138, and then when you have a test of this previous low, the support, and if that becomes resistance, then the decline from there should aim at 135. Okay, so look for this type of action, a test of this, a rally, and if that rally fails, then another move may come down to the 135 area. Alright, that's it for the pound yen. The Australian dollar, Canadian dollar, New Zealand dollar, South African rand, these are commodity currencies that have been performing very well along with oil and gold. Here the Aussie, you see, had tested the 61.8%, 88 area, and there's a reversal signal from the weekly time frame. So market looks like, it did create another high, but you see this kind of choppy price action, so we can expect the market to have topped off. You see here 60, the market remains below 60, so in this, we still may have a decline. The market, now looking at the daily, you see this week the market was pretty much ranging, but Friday's risk aversion hurt the Aussie yen as well, and you see this momentum reversing. You see this reflected in the price action as well, although it hasn't broken this declining trend line, but the RSI foreshadows that it will. Okay, if that breaks, actually let's look at the 4-hour time frame. Okay, that should coincide with the break of this 200 moving average in the 4-hour time frame. You see here we are already showing bearish mode in the bearish momentum here, although the market has been just sideways and actually expanding this sideways action. So look for some decline, look for some yen strength in the coming week, even for the commodity currencies, but mainly I would look for bottoming action after next week. Next week is likely to be a continuation of this reversal. Look for some bottoming action here. 82 area, rising moving average, 200-day moving average, because again, I'm maintaining the relative strength of the commodity currencies versus the euro and the pound. So Aussie and Canadian dollar yen, you want to look for bottoming action, while the euro yen and the pound yen, you want to look for topping action. If I didn't tell you, you probably think that this was also the Aussie yen, but this is the Canadian dollar yen, which is in a similar situation. Here's a reversal. Here's a test of 60, failed to fully penetrate and sustain above, but price action looks like it's broken this previous high here. But here we have a throwback. So looking at the daily, and you see that we're in the channel, and the market was due for correction. Next couple of weeks, so I would look for the market to be supported around the 87 area, and if the market bottoms and rallies from there, I would look for it to continue rallying. Let's give it some Fibonacci. So going to the 97 area to test this 200-week moving average would be the next move after bottoming action and a rally. So that's the short-term outlook, short intermediate term outlook for the Canadian dollar yen. Look for bottoming action around after this decline around 87 area. Here's a look at the dollar yen weekly. Here you see the market still failed to break above this reverse head and shoulders, failed to confirm it. If the market rallies next week and breaks above this previous high here, then the bullish confirmation is we have one for the intermediate term, and also the RSI has to break above 60 here in the weekly. Okay, so in the daily we see a correction. This is another wave. You see one wave, consolidation, second wave. I'm looking for this to be very sharp. The market, you see, has been in very sharp corrections. Okay, so look for this to be a sharp correction as well, possibly down to the 78.6% retracement area. If the market bottoms here and rallies, you see we are essentially in a very gradually inclining channel. And if you look at the weekly, the market was in a pretty much gradual decline as well, and now a reverse. If staying in the same choppy mode, we will be in a gradually rising channel. And that's all for this week. Check out fxtimes.com for other technical and fundamental analysis as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you a great weekend.